Hey, what's going on, Rockstars? Welcome into the channel. A quick news story I wanted to give you guys is that Amazon's stock has split. So, of course, Amazon going up into the thousands of dollars, at one point over $3,000 a share at peak, I believe, maybe even higher. It was down in the 2000s as of last week, as in the beginning of the month, and the stock has split, and it is very, very low. If you're not familiar with what a stock split is, we'll cover it in just a second, but I thought this was a good opportunity since I got a few messages asking if you should invest in Amazon. And since Amazon's stock split, it had a bit of a tumble, is it a good time to buy their stock and invest in Amazon? Because it's Amazon, it'll go back up, right? Well, maybe, maybe not. Let's go over and check out the story over on my iPad, and I'll give you a little bit of why I think it may be a good move and why I am a little bit cautious because of the current economy and the situation with crypto and stocks and all that just being down in the toilet. So let's go down there. Let's check out that story, and then you can decide for yourself and let me know in the comments if you intend on investing in the new split Amazon stock. Okay, from USA Today, what does it mean when a stock splits, and why are Amazon and Google doing them? On Friday, Amazon stock was at $24.47 a share, and on Monday it closed almost $125 a share. On paper, that shakes out to over 5,000% decline, but no one actually lost money. In fact, if you bought shares on Friday and sold it on Monday, they would have come out ahead, short-term capital gains tax aside, since the stock closed higher. That's because the company executed what's known as a stock split. First time in 23 years, mind you. A stock split means a share gets split into multiple shares. Typically, companies do the 2-for-1 or 3-for-1, but Amazon executed a 20-for-1 split, and here's what it means. A 20-for-1 split means that Amazon shareholders got 19 additional shares for every one they owned before Monday. Since Amazon shares closed at $2,447 on Friday, before the markets opened on Monday, the price of the shares after the split went to around $122, or $24.47 divided by that 20 split. Google's parent company, Alphabet, is planning a 21-to stock place that will take effect on July 15. Amazon's market value didn't change as a result of the split because share prices decreased as a proportional rate to the number of shares that were made available. Amazon said the split makes the stock more accessible for anyone who wants to invest in Amazon and give employees more flexibility in how they manage their equity. Do you lose money? Just like their market value doesn't change, your shareholders don't lose any money. And is a stock split good? Generally speaking, stock splits are a good sign because they mean that a company has done well over time, that a price of a single share is too expensive for the average retail investor. So in other words, they're trying to make this more accessible for you and I. Should you buy before or after a stock split? Theoretically, stock splits by themselves shouldn't influence share prices after they take effect, since they're essentially just cosmetic changes. But Bank of America research analysts found that since 1980, S&P 500 companies that announced stock splits significantly outperformed the index 3, 6, and 12 months after the initial announcement. Over 12 months, stocks that announced splits gained an average of 25% compared to 9% in the S&P 500. Their research seems to suggest that it's better to buy a stock before it splits so you can have skin in the game before it shoots higher. But it's important to keep in mind that some of the outperformances is likely due to momentum. Once the split is executed, investors who have wanted to gain or increase exposure may start to rush for the chance to buy. Ultimately, a company's underlying strength is what drives the direction of the stock. In other words, how well is the company doing, which is what it should always be, not just how much the next guy will pay, a la crypto. That said, since Amazon made the split announcement, its stock is down more than 11% as of June 6th. But this comes as tech stocks have been facing a widespread sell-off as consumers cut back on spending due to inflation and recession fears are mounting. In past recessions, tech stocks have underperformed relative to other sectors like consumer staples and healthcare, because those ones are things that you have to have, healthcare and home goods and consumer goods. Tech, you don't have to have. I know it sounds like in 2022 we have to, but technically you don't. So should you invest in Amazon? And that's the question I asked at the beginning. No, I do not think you should, because I don't think this stock split is honestly going to change anything. I think that the economy is still on its way down, and I see as a $125 per share stock there, Amazon could go down. It probably won't go under 100, but I could see it going into the 105s or 110s. I think if it got below 110, I would buy it. If it got below 115, it could be like close to the bottom. I think its bottom right now is probably in the low 100s, 105s to 110s. I think we see those numbers get hit in the next month or so. So we'll have to watch and see. Come back and comment. Let me know if you intend on buying Amazon or what you intend to do with their stock or any other stocks. And until next time, I appreciate it. Hit that like button. Make sure you're subscribed to the channel. And as always, have a wonderful rest of your day.